Look, I'm not into chasing news, but I can't ignore what the Congress is doing. It's pretty obvious a good way to print money is to copy people with more information. I've dug through lots of content, research, and built a case for 3 stocks that Congress is buying, which I believe are a good price to purchase right now. Of course, the first stock is Nvidia. Let's not waste any time and jump into it. This is a stock that Congress was buying before Nvidia's exponential rally, and we are in luck because Congress has to disclose what they're buying. That means us as general investors also have insight into what other people are buying that have more information. It's very important to pay attention to this. In 2024, equities and AI will rule. AI stocks are going to do very well. I choose Nvidia because they are better positioned to sustain long-term development potential and offer other AI startups a platform. Congress has shown interest in Nvidia due to Nvidia's critical role in the rapidly expanding fields of artificial intelligence and data center technology. As AI continues to revolutionize various industries, Nvidia's GPUs are at the forefront of this technology shift, and they're driving demand, and they are capturing all of the demand for AI products. The government's recognition of Nvidia's strategic importance in AI and technology infrastructure is very evident in their investment decisions. Additionally, Nvidia's robust financial health, innovative product pipeline, and dominance in the AI chip market make it an attractive investment for long-term growth. I believe Nvidia will reach $500 per share by the end of 2027 or 2028 due to several factors. Firstly, Nvidia's consistent revenue growth, driven by its leadership in AI and gaming GPUs, positions it for continued financial success. With a forward price to earnings ratio of around 35, Nvidia is expected to maintain strong earnings growth, supported by increasing adoption of AI across various sectors. Furthermore, analysts project a 42.8% growth rate in Nvidia's earnings per share over the next 5 years. If Nvidia retains its market dominance and continues to innovate, its stock price could absolutely soar. By applying these growth metrics to Nvidia's current financials, I predict the stock could honestly be around $500 per share, assuming favorable market conditions and continued technological advancement. Nancy Pelosi made a killing on Nvidia. No surprise. She has information that the general public doesn't. That's why Congress people like Nancy Pelosi can make a lot of money. And speaking of Nancy Pelosi, former House Speaker Nancy Pelosi has also been doubling down on other specific stocks, making notable and very profitable trades. She's beaten the market and the S&P 500 by a ridiculous amount. Her recent performance in the stock market has been exceptional, nearly tripling the S&P 500 return in 2023. Do you guys understand? Tripling the S&P 500 is literally unheard of. Most investors can't even match the S&P 500. I'm talking about engineers, mathematicians, physicists working on Wall Street. So look, recent purchases. If you look at Nancy Pelosi, she recently bought 10,000 shares of Nvidia, and she's been adding to her position over and over, and she has call options on Nvidia, and also she has call options on Broadcom, ticker symbol AVGO, which is the second stock that I'm going to be talking about, with a strike price of 800, and those option contracts are expiring in June 2025. This strategic purchase is likely influenced by upcoming catalysts such as Broadcom's 10-for-1 stock split and its strong position in the technology sector. Now, Broadcom's market position is very interesting. Broadcom is a global technology company known for its semiconductor and infrastructure software solutions. The company has a significant market presence with more than 99% of internet traffic passing through its chips, and it maintains strong relationships with major clients like Apple and Google, 2 of my very favorite stocks. Now, Broadcom is interesting to look at, and I have put it on my list here for you to also potentially invest in it because they have a competitive advantage. Now, competitive advantage and having an edge and growth potential is super important in any stock that I invest in. In fact, I want to make sure a stock doesn't crash, and I'm more concerned with a stock having strong support rather than a stock going up, because I like to be safe and I like to have consistent, safe passive income trading options. So look, Broadcom's competitive edge lies in its extensive patent portfolio focusing on research and development and strategic acquisitions like CA Technologies and Symantec Enterprise Security business. These factors contribute to its strong market position and growth potential, especially with the increasing demand for data center solutions and 5G technology. Now, I want to be honest, I'm looking at risk management, I'm looking at risk analysis, and while Broadcom is poised for significant growth, there are potential risks including supply chain disruptions. However, analysts remain bullish on Broadcom, citing its robust portfolio, its product portfolio, its strategic acquisitions, and its strong cash flow generation as key factors supporting their positive outlook. And of course, it doesn't hurt at all that Congress members are buying Broadcom. There's something that they know which the general public doesn't. So that's why this is a very important and key stock on my list here. Now, the last stock, and by the way, I have a bonus stock, so this isn't the last stock, but the last stock is a tie between Coinbase and Airbnb. See, Congress has a lot of power over laws, and both of these stocks can jump a lot given changes around cryptocurrency laws and different housing policies. Congress can influence Coinbase's stock through various policies and legislative actions like regulatory framework, tax policies, and much more. Coinbase stock is also pegged to Bitcoin more or less because, as Bitcoin price fluctuates, they have more transaction volume, and basically the price equates to Coinbase's fees, which equates to Coinbase's revenue. Garrett Graves, a Congress member, has been investing a lot into both Coinbase and Airbnb, and I have paid attention basically to these two stocks. I don't personally hold any crypto, but I believe Coinbase to be an interesting position of some of your risky capital. Let me be honest here. I don't think you should put a bunch of your capital into Coinbase, but I think it does deserve 3 to 5% of your money to be invested in Coinbase because I think cryptocurrencies in general are fairly good diversified assets to own as part of your wealth equation. And I think Coinbase can deliver some really good alpha. Now, moving over to Airbnb, I would have simply said that Airbnb is a very good investment based on just the gig economy alone, okay? Because a lot of people are choosing to own less, including myself. I travel, I don't really own too many things because I want simplicity. Look at Uber, look at Lyft, Airbnb. These are all part of the gig economy, but also policymakers are investing in Airbnb, and the valuation of Airbnb is very fair in my opinion. Actually, if you look at the past 5-year returns, this stock has done nothing, literally nothing. So I would say it's about time for the stock to go up, and policymakers are buying up the stock a lot. So I think it's a very interesting investment. Now for my bonus stock, I want to give you another bonus stock to invest in, and I think this one's a no-brainer buy in the second half of 2024, even if we go through a recession, even if interest rates go down, even if interest rates go up, even if more people are unemployed. I don't think it matters. This last bonus stock is Amazon. The clearest headwind for the current and prospective Amazon investor is the likelihood that US could go through a recession, and it wouldn't even matter because a recession could take shape in the not too distant future. We see that there is some data pointing to that. I'm not going to predict the future. I don't know. Although US economic data has remained relatively strong, if it were to be a market recession, Amazon is going to fare very well. Look, the reason why I would invest in Amazon is the same reason that I am personally investing in Apple, Tesla, Google. It's the same reason I'm up $300,000 on Apple. It's because of brand. People want simplicity. And when there's a company that gives you a simple solution, money is not a problem. I personally believe that money is super abundant. There are many ways to make money, and rich people will definitely be spending money on Amazon. Poor people will also definitely be spending money on Amazon because of convenience. Especially the American consumer, convenience is such a huge part of the American consumer. We're so used to that. We can't even get away from Amazon, even though a lot of people are spending a lot of their paychecks on Amazon, including, Whole Foods, which they own. So while recessions can be scary, the important thing to remember is if you're invested in high quality companies, it doesn't really matter. In the 78 plus years since World War II ended, 9 out of the 12 US recessions were resolved in less than 12 months. This means consumer facing companies like Amazon are going to be just fine along with the other stocks that I cover on this channel for the most part. Some stocks could take longer to recover, but if you have a high quality stock with a brand, good profit margins, then that stock is going to do really well. You can also buy Leaps or profitably trade SPY and keep it very simple. You don't have to invest in single stocks. And I cover both of those strategies on this channel very recently in the past couple of weeks. So I encourage you to keep learning and watching more of my videos, make some money, and I'll see you guys in the next one.